Hey there, welcome to the 6th episode of Vaultside. We are your hosts, Citizens for Sound Money. I am Chairman Reyno Kutsia, and with me is Daniel Diaz, our Executive Director. And representing the forum is Yuchiki, all the users on the forum. Just a little bit about C4SM. We exist to encourage use of sound money and promote and protect people's right to do so. You can go look at our website at citizens4soundmoney.org. Please look at our initiatives. Join us if you can. We promote the use of sound money through legislation, education, and through building coalitions like this one we have with Kinesis, partnerships with stakeholders in the sound money community. And we're very excited and proud of this relationship. And so, Tom, we would just like to maybe have you introduce who's on the call tonight and just give us a little introduction on the state of Kinesis.
Sure. Thank you, Reyno, and thank you to the C4SM team. You guys are doing a stellar job at the moment. I've been tracking you. I'm a fanboy myself. So any help that we can give to you as well, it's there, and always will be there. So yeah, and also hello to the community. I know it's been a little while since we last visited. And thank you for tuning in. On the call today, we have our one and only President and CSO, Chief Strategy Officer, Eric Maine, dialing in from Istanbul in Turkey. Jai Bifulco out of the UK. Also Andrew Maguire, Director, dialing in out of the UK. And we've got Jason Norman dialing in out of Melbourne, Australia, and myself. So thank you, everybody, for tuning in, and we can just get down to business and cover off as much as what we can.
Okay, well, Tom, thanks for that. So let's go ahead and just sort of get a general update from Kinesis since the last time we had this Vaultside. Lots has happened. Kind of give us an overall 10,000-foot view perspective.
Okay. Well, where do we start there? So there's been a lot going on behind the scenes, I must say, and lots of battles, lots of 20-hour days from the executive level all the way down to, you know, like the troops, the soldiers actually just battling it out in different areas of our business. So, and one thing I will say is, after all of this, I think that we've actually earned our rite of passage going forward. You know, sometimes it feels like we're pushing water up a hill. Sometimes it feels like maybe Kinesis should be renamed Murphy's Law or something like that, right? But the pendulum swings from one side to the next, and it's my view that, you know, everything that could go wrong has gone wrong in the past will actually swing that where everything that could go right will go right. But, you know, looking at how projects are now lined up in our pipeline, it truly is sort of coming to a head now where we're about to have a second coming, so to speak. And second comings can be extremely powerful. So that's what we've been gearing up for. We've done our best to keep our powder dry, to actually gear up for that. We've done also our best to keep our community entertained and rewarded along the way as well. We know that we're not perfect. We know that, you know, certain, you know, things have been stressed along the way as well. But we've been lining up to reward everybody with a pipeline of projects that will be rolling out, that will be not only like what's written on the tin as far as, you know, our foundations, but much, much more. And there's a lot more there that we haven't spoken about, not even with you guys in any respect, not even from a high level anywhere. There's a lot lined up there. So the high level is that, you know, we've been really, really busy on our stablecoin suite. We've been really busy on on-ramps. We've been really busy on our cards. And this is a full spectrum of cards, which takes us across the world, and not just debit card, not just virtual card. but a full spectrum of cards that, we want to be the one-stop shop for banking and payment solutions for our community. So we've been gearing up with regards to that. And then we've got a number of public-private partnerships that we're about to start sort of announcing. Actually, we've alluded to one out of Latin America, but there's others, and they're not a small deal, and we've been working on them for a long time. It's always hard to sort of keep tight lips with regards to them, but loose lips sink ships. And there's a lot of people waiting on the sideline looking to jump on us. So we've been very tight-lipped with regards to these things, and these things need to be announced properly. There's government officials and that sort of thing that will also be included in announcements and so on and so forth. So there's been a lot of regulatory work on our side as well. I'm the sort of high-level commercial guy, I guess, the CEO, and our compliance and legal teams sort of operate in a silo as they have to, in accordance with like regulations and with regulators and so on and so forth. We've been going through a major review process and audit process and new licensing regimes with regards to Cayman and other jurisdictions where we are. So that has also been keeping us very busy, but we're just really gearing up for this next phase. So yeah, you guys are going to see a lot coming through, starting really this quarter. And the other thing I will note is there's been actually a remarkable change in tide and sentiment in the market. So before, like, let's say, there was a major attack on banking for organizations in the space where, like, basically banking partners, like, they had to pull out of the space. They were under such heavy pressure by governments and regulators that they just had to pull out of the space. And we were not immune from that. We navigated that situation the best that we could. But now they're all coming back into the space. So it's actually, it's a rewarding feeling seeing all these partnerships that we actually put a lot of time and effort into previously actually come back online, tapping us on order. Hey, we're here. We're keen to kick things off again. So where we were like had no choices before, we are like spoilt for choice. So it's a little bit of a funny phase, like a little bit of a limbo period where we're spoilt for choice. We've got all these partners that are like lining up to come back, but we're going through an integration period with them. So we're going to have the world covered as far as on ramps, off ramps in all different capacities, cards. That's one side. I really like the whole KPay side as well, and where we're going there with directories and supporting merchants and all that sort of thing, because that takes us to be like an end-to-end solution and not having to rely upon other third parties in the payment space. And of course, we evolve in the crypto exchange space, and we've got a number of corporate events, including mergers and the like there as well, which spans, stablecoins, real world assets, and that's all lined up. So yeah, here we are. That's the 70,000 foot view. Now we can start drilling into things.
That's great. So speaking of covering the world, can you speak a little bit to Africa? Anything that's going in Africa? We saw some things announced in the quarterly update, and maybe even other regions of the world. Perhaps you can tease some of the regions of these public-private partnerships that you guys are close to announcing.
So yeah, Africa's coming into focus a little bit, like this quarter and next quarter. Christian and his team out there, like they've been working very hard for a number of years out there now, and so we're prioritizing basically the pipeline of projects and integrations out that way to bring online in a proper way the African continent. So you're seeing, like reputable, prominent partners coming online in that space. It's a sequential process. So, I think you guys know of a number of different countries that are coming online. So I think there'll be, as far as on-ramps, off-ramps, and like full capabilities for onboarding clients and connecting in with different clients. There's a couple of partners that we've integrated into, and they've integrated into us, and we've integrated into them in different respects. So it brings online the whole sort of fiat on-ramping, client onboarding side, and then cross-pollination of different services that we both offer. And that's really that respect. So stay tuned for developments there as they come through. But Africa's coming into focus there, and all that great work that Christian's been doing out there will be coming through. So yeah, that's what I'd say on Africa. As far as public-private partnerships, we've spoken about Latin America previously. There's been a long battle there. We've played a role in writing legislation. You guys know a little bit about all that, lobbying and writing legislation and all that kind of thing, and getting approvals through like their parliamentary system, and then getting vetoed by the president, and new presidents coming in, and then working through processes there. It can take a long time. We're very close. In fact, we've got approval for to be rolling ahead with a number of different countries now out of Latin America, but there's also a nation that will shortly be announcing in Asia as well. There's a multi-year effort that's gone into that as well, so it'll be good to see that come through. So yeah, that's on the public-private partnership side, and yeah.
Daniel, you want to go ahead?
Yeah, and I think it's good that you brought up Asia. That's my next question. Since the last Vaultside, how have the numbers looked like in Indonesia?
Yeah, thanks, Daniel. I'll take that one. So yeah, it's been fits and starts, and I think the best way to describe it is that Indonesia has really concentrated on building the technology and the platforms and integrating with those partners that could help scale. And that goes to, well, now there's like five platforms from various partners, JFX, we know BT POS, and the big one, NU, which was the most recent one. And now there's the time to, facilitate, onboarding a lot of clients. And there's been some issues with that.
Okay. And then, Eric, so there was some talk about a change in the regulatory authority from Bailee to OJK. Can you comment on that?
Yes, and this is following with, the roadmap that we've been going through. So there's been a lot of back and forth between the regulators. Where does KAU, where does digital physical gold fit within the sphere of Indonesia opening up to crypto markets? And the regulators have discussed and gone back and forth. And thus far, and probably for the foreseeable future, KAU and digital physical gold and all the platforms that we integrate with will remain with FFT, the commodity regulator. But there's been some positive things in those interactions between those two regulators. OJK is a little more forward thinking because FFT thinks in terms of commodities and futures and really is not in the electronic trading space where OJK is more prevalent and will be, has obviously been considered that the crypto exchanges will fall under them. It's actually good that we don't fall under the crypto exchanges. There's quite a bit of there's a high capital requirements for platforms to offer crypto in Indonesia through that regulator. But the good things that have happened are this. Until recently, and this goes to about the volumes and bringing scale to Indonesia. Until recently, through BAPT's orders, anybody who opened an account with any of these applications, these platforms, had to fully KYC. They had to go through the whole, video selfie and loading documents for proof of address, etc. And they had to do that, or else they couldn't even get onto the platform to look around and play around and see the liquidity, see the order book, see the features, see the the pricing and how good the price is, etc. And so as a result of those discussions, and we've been trying for a while with BAPT to change that to a more the crypto model and what we know of Kinesis of having a lighter touch KYC at the beginning, get people interested, and then you more fully verify and you're able to utilize the platform in an unlimited way. And they were resilient to that, but with their discussions between us and BAPT together with OJK, who is adopting the crypto model, which has been great for crypto exchanges, right? You get people started on a very light touch KYC, and then you can more easily onboard them more fully to get them fully engaged with the platform. So just recently, the order came from BAPT as a result of that people can now, the KYC is very light. So all you have to do is give your name, your email, and your ID number. That's it. You also automatically have an account. You can go onto the platform. You can play around. You can even do up to the equivalent of, I believe, it's $1,000 a month with just that basic nothing of KYC. Yeah, that will make the ability for those and you and some of the other partners to really be able to scale, because it's been a problem. There's been a big logjam of people interested, but they couldn't see the product because they weren't going to go through the KYC fully because they didn't get the benefits of seeing how good the platforms are, how good the pricing is, and features, etc. So this light touch KYC will help these partnerships immensely to scale, and that's what I'd say there.
Yeah, and I'm kind of curious about if you've done one of these, you learn a lot of things, and then the other countries, I'm sure every country's different, but then you learn things from that experience that helps you with the next country.
Oh, absolutely, yes, it definitely is, and as you say, it is different in each country, but we come preloaded, so to speak, with with our wish list, and we have we're able to back it up by commenting on what other regulators have done. And that makes the process a little bit easier for sure.
So during the last Vaultside, the Kinesis Bailee Company seemed to have cleared the regulatory requirements. But as a result of looking at the last audit, people will have seen that ABX was still the Bailee. Could you talk about the remaining hurdles before Kinesis Bailee Company takes over from ABX as the Bailee of the gold and silver in the Kinesis vaults?
So yeah, we got clearance out from SEMA for Kinesis Bailee to come over to take over as the Bailee Company. The issue is Kinesis Bailee Company is an Australian company. And Australia is entering a new regime whereby services, including custodian services, issuance services, and so forth, like basically any services touching tokenization or crypto, is being pulled into the Australian financial services regulatory regime. So it actually does capture Kinesis Bailee Company. Now, it's not in yet. It's flagged to be in by the end of this year, but ASIC have their eyes on the space, and the guidance that ASIC have provided is that if you're in the space now, then you need to actually have your Australian Financial Services license application lodged like now. like showing that, because there's actually a time period of at least sort of 6 months to actually get it, get the license. So this is what we're jammed up against. So Kinesis Bailee Company is actually likely to be sucked into the Australian Financial Services License regime in Australia. This is something completely separate to SEMA. So although SEMA have approved it, we're multi-jurisdictional with Australia. So this shows the complex nature of what we're dealing with a global business. And so we made a call to not just flip over, because we'll likely have to flip out of Australia, and then it just sort of looks a little bit strange if we're, turning on Australia, coming back out of Australia, and the like. So we decided to keep it as is for the time being. And one thing I will say is that we don't see an issue the way that it is at all. That's how we launched the system. That's how we always intended for it to be. Within the system, it utilizes like the ABX exchange as the both the safekeeper and the utilization of the exchange facility there for the mint. So, but we are analyzing what to do next. We know that the community, they want a dedicated Bailee Company. This dedicated Bailee Company, it's going to get sucked into crypto regulations around the world, because it's providing a custodial service for Kinesis Cayman. So that is what we're doing an assessment on now. Our legal team is really banked up with a heap of stuff, but we're doing an assessment on that now. But to actually, like the resources that need to go into an Australian operating Australian financial services license here in Australia for it, and obviously it's in Australia. The main service that Kinesis provides in Cayman, is there really any huge benefit in the dedicated Bailee Company being Australian? We don't know. So anyway, this is something that we're assessing at the moment, but the landscape is incredibly fluid, and I can give you various examples on how we have to maneuver. So it's almost things can't be locked in stone, because we've had to maneuver just by looking at what's happened with our stablecoin suite, where we came out with USD1, and no, we weren't able to trademark USD1 because it's too generic. And anyone who actually delves in and looks at what happened there. There was a rejection for, trademark based on USD1 being too generic. So, we thought, okay, well, we'll push in behind this anyway. So, because we like the name and it tied up with Currency One, Stablecoin Suite and the like. But, we got pushed out of the game by Liberty Financial coming through. And, that they just, pushed through really fast, and we got pushed out. So then we had to change the name. By the time that we decided on the name change, then another party pushed through with the name and a trademark application. So then we have to change the name again. So it's a really quickly evolving space. I've always said that we're a startup company in a startup industry, but it's evolving really, really quick. So this is one thing. Unfortunately, it does translate into consumption of resources and time as we maneuver. But I've also always said that the ones who firm themselves up in this space will become the titans. The barriers to entry are going to be they're big. They're already really, really big, the barriers to entry. And even just to, partner up with the right partners, that is something that takes a tremendous amount of time, and they're like established partners in the space are very selective. So that is something that we're maneuvering on. It's obviously a legal compliance and regulatory thing. I need to be careful in making clear representations there, because it's really up to them. And so we're maneuvering in accordance with regulations to make that happen. We understand the what the community is looking for there, and we'll make it happen. We just have to maneuver according to the regs.
Okay, that's great. Thanks, Tom. It's obviously quite a complex situation with the different regulators.
Quick follow-up on the concept of proof of reserves. We may as well speak to that, because I think that's perhaps why you segued from Bailee Company to USD1, because you guys now are going to have all these stable coins that have reserves. Is there a way to sort of roll all that into one? Is that a consideration? And what is the plan for proofs of reserves? This is one of the questions that's come up quite a bit when we start talking about billions of dollars with a B. A lot of people get nervous and they're like, okay, well, we want proof of reserve. So maybe speak to the proof of reserve concept, and then also to how you foresee the attestation to audit the evolution of the proof of reserve, how you see that playing out.
Yeah, sure. So certainly the stablecoins will make proof of reserve a lot easier. And we are doing a lot of work in the space. Actually, Jai's running a proof of reserve project as we speak now. So we understand that the need for proof of reserve, and it flows into trust and all that kind of thing, and establishing a verified environment. So there's different levels of proof of reserves. So you got the digital asset, you got the physical assets. And they both, need to be proven. So obviously, for our physical audits, we utilize the premier auditor in the space that audits, the ETFs, and they're the guys that have the expertise to properly do the audits. It's a huge undertaking and commitment across all the vaults that we're across, and it all needs to be synced up across the world, which is a massive coordination effort. It takes a lot of resources to coordinate it all. So that's on the physical side. On the digital side, yeah, there's solutions out there which really assist with that. On the stablecoin side as well, with and then dovetailing into the real world asset, we have and we've over-indexed as far as that is all concerned. And there's different ways to help provide real-time proof of reserves as well. And we're also exploring that. But on the stablecoin side, it's worthwhile noting that we got stuck in this soft launch phase because we needed to change the name. And changing the ticker code is not something. It's not like a usual database where you just go in and press delete to the name and then type it in and rename it. It's not like that. Jason can talk about it actually. Like when you spin up and basically a blockchain instance. Changing the name is akin to, magically changing the name of banknotes sitting in someone's safe. You can't do it digitally. So it's taken a lot of unpicking out of the KMS, because we've got the blockchain, but then it was all threaded through the KMS, and not only that, through the largest project that we've ever undertaken as an organization, which was the Hybrids project, which was bringing online all of these different stable coins to take over basically our fiat, and we had to do things in a regulated way. We couldn't basically mandatorily convert, so we went through an evolutionary process with the Cayman regulator there of, okay, do we give notice period, or do we make it electable, where basically there's two sub accounts, a fiat and a stablecoin account under effectively a one hybrid account. And we went through an evolutionary process there, and then with the name change and centralized exchanges, they won't list two tickers, so that even if we wanted to take on Liberty Financial and ultimately the president of the United States himself, we'd bang up against these restrictions, such as other centralized exchanges just simply not listing us, because we got the same ticker code as another token within their system. So that was sealing of the deal there. So as far as the proof of reserves, we were underway with two different audits, and they would be like periodical audits that would be done on the reserves, and we put a hold on those because the name's changing, and there's reserves there, and there's all back end stuff that needed to be flipped over. Huge undertaking, and same with the insurance. But behind the scenes, we've got that name change, and there's going to be a transitionary period. And as we come out, there'll be this whole corporate governance framework with all proof of reserves there. Unfortunately, we got stuck in this soft launch phase. Now, I'm not expecting for sympathy because of that. It's just part of our journey, and we learnt some things along the way. And that's that. Now, that's why we soft launched, because we recognize that the robustness of our proof of reserve system at the moment might not be, like the top of the top, but where we're going, and particularly with the insurance, it will be top of the top. It'll be game changing. So, yeah. And Jason, I don't know whether you want to comment just on the transition there with the stablecoins and from your perspective.
Yeah, sure, Tom. The stablecoins and the renaming is quite interesting, and I think what Tom's referring to is, if you think about when you go to exchanges, Bitcoin, Cardano, AVAX, etc., they're the labels. Can you change them? You can, right? What you can't change underneath all those, there's BTC and etc. So where you get the ticker codes is actually baked into all of the smart contracts. They're the things you can't change, and that's what all of the exchanges worked at. There has been an extraordinary amount of work, and as Tom said, we're in a kind of fluid stage where the world's changing around us, and we need to change with it. You can't, if you're for that old book, where's my cheese? We can't go there and say, look, who's taken my cheese? It doesn't work like that. So we do spend, we spend our time mindfully on a lot of the stable coins. We try to preempt where they're going to the best of our ability. And I think some of the changes that are coming through, look, they make sense. And now we need to just, make those changes. But again, for us, there's a lot of underlying blockchain activity. There's blockchain activity with our partners that manage some of our keys and so forth. And we need to go through that work again. So unfortunately, it's not as easy as Tom said, go to the database, do an update where name equals BTC equal, or, where name equals USD high, USD1, and change it to something. It doesn't quite work like that. But the good thing is we're becoming really efficient at, creating the new tokens and getting them active. Now we know what works and what doesn't work. And look, and we've learnt that just through the pain of having to do this now several times.
I'll just chime in there. There's something that will be made public shortly that also required additional work, and almost a little bit of a blessing in disguise, because it would have been a tremendous amount of additional work for us had we already gone live with the stablecoin suite. So that's coming out public. It's something completely outside of our control that we had to do with. In accordance with something to do with a partner. Let's put it that way. But it's it's all good. It's done.
If I could follow up, Tom, you mentioned the insurance, and in light of the slew of new Kinesis members that are probably going to see this for the first time, can you explain a little bit more details about the insurance product and what that means for the stablecoin suites, and how does the Genius Act kind of play into the stablecoin suite and the insurance and so forth?
Yeah, sure. So the insurance insures the peg to the underlying assets, basically what's on the tin, and so that's effectively what the insurance does. It's a pretty major thing. I think it's the only instance of it occurring out there to date. And then the Genius Act. That is also something that our legal team is certainly better versed than I am. We've done a lot of work on the Genius Act. We've done a lot of work on all global regs, including MICA, etc. But so with the Genius Act, there is a transitory phase-in phase associated with it. But KAU, KAG, KVT, etc. They're not defined as stablecoins in accordance with the Genius Act. They're commodity tokens. So we're not affected like that, but we've got our eye on it, like very, very closely. Obviously, the stablecoins that we're issuing, have issued and will be issuing, will be affected in different ways. But we're complying with everything to do with the Genius Act there and other global regs.
All right, Tom. Well, thanks for that explanation on stablecoins. We're looking forward to you guys being engaged in the U.S. Of course, huge market, and we get it. There's tremendous change going on in the market, so it's quite interesting how all this is evolving. Following up on debit cards, so. The bank's virtual card is supposed to go into beta pretty soon. Can you speak to us about that particular card, and maybe once you're done with that, expand into some of these other regional cards that you guys have planned that are redundancies for users?
Yeah, sure. Firstly, I won't hold back because I don't care anymore. With regards to our partner banks, who have not been a very great partner, I got to say, regarding this whole sort of rollout. So we wait on them to basically enable us there, and I'm playing a major role as far as pushing that along and tormenting whoever I need to torment at the other end. So in all seriousness, we're hoping that it will come online very soon. The team has put a tremendous amount of time and resources into building it all, and it's very frustrating for us because we've got this whole build out to the side, which as the KMS develops and evolves, we have to also keep on updating the build, like the virtual card banks build out to the side to continue to be updated with the KMS evolution. So we want more than anybody else to get this thing live. It needs to get live and go from there. But we, of course, we've had to push forward with other partners that are higher in the food chain and on debit card side, and also extending into more extensive card services as well. And we'll be excited about delivering those services to the community. So look, stay tuned. It's really difficult to commit to exact dates around banks. We hope that it will be very soon, imminent. But we do remain at their mercy as far as when that's actually going live. And I mean, this brings another topic into the fore, and that is that now that marketplace and the industry is maturing and the regs are coming about all around the world, that it means that compliant organisations such as ourselves, and we're actually in a highly robust regulatory environment out of Cayman now. Cayman have come off like the FATF grey list, and they've really actually, I would say, over-indexed as far as their regulations are concerned in the like the anti-money laundering space. And some of you guys feel like this with regards to all of our checks and that sort of thing. That is all outside of our control. Like that is in accordance with SEMA and connecting directly with our compliance team. That's not us. That's SEMA. So everything there is like, when you feel frustrated and that sort of thing, like don't be frustrated at us. Be frustrated at SEMA. So they've had to really sort of go above and beyond to pull themselves off the grey list. So they're off the grey list now, and because of that, you're seeing like banking partners around the world now offering services to Cayman, whereas say they might not offer it to BVI, British Virgin Islands, or Isle of Man, or other jurisdictions around the world which are on the grey list. So because of that, banking services and different partners are coming online all around the world. So we're able to expand our choice of offerings and services to our community there. Yep. So just rounding that out there.
All right, so Kinesis Pay is being primed for increased use. In the addition of the Currency One suite of options to KPay, I think it was 9 currencies that was added, if I'm not mistaken, with hybrid accounts will provide a gateway to businesses to receive low-cost electronic payments. So while purchasers may appreciate the wider range of payment currencies, will it be possible for non-crypto savvy businesses to restrict the payment currency to just their own Currency One fiat?
Yeah, great question, Daniel. So yes, in short, we definitely want to make it configurable. We have a multi-phased plan for KPay. We have started with the ultimate vision in mind, and then what we've done is we've looked at how we can develop that vision into place step by step. So not all features come, part and parcel with the first release. But the intention is to absolutely have it configurable for a merchant. If a merchant only wants to receive KAU and say a stablecoin or just one asset, they can most certainly just accept that one asset. Whether that's configurable from the very first moment we release the next phase of KPay, that's yet to be determined. But it definitely is on the roadmap.
Oh, awesome. And there have been a number of form requests for Shopify integrations with KPay. Can you elaborate on that and any other things that are being considered to expand KPay's use for merchants?
Yeah, absolutely. We started with WooCommerce, and we're definitely moving into Shopify next. The plan is to have a wide array of SDKs available. And not only that, the support and the environment in which to test those things. So we're looking at bringing on a whole suite of services to not only bring the plugins in play, but to bring the support that's needed to go along with them as well.
Great. And a follow-up question would be with that. Is there a plan to introduce recurring payments with KPay? Like, for example, enabling subscription-based services so that people can pay their subscriptions with North Star badge charts.
Yeah, it's one I want myself, actually. I'd have my recurring payments going into a compounding savings program in gold or whatever. I mean, there's so many applications for recurring payments. As we get into, through all of this sort of chunky development, we're starting to open up into all of our payment providers, banking providers, and different services. And there's so much coming our way at the moment that this recurring payments thing is high on my radar. Now, I haven't seen, the technical scopes are huge, but recurring payments is definitely one on there, and we'll get it done for sure.
Follow up on that. Now that we're in spending mode, the concept of having an investment account and a savings account, or a checking account and a savings account. Is there a discussion? I know we've spoken about this previously. The ability to be able to segregate one's funds into maybe two sub wallets or something of that nature, where one is that you're going to use your debit card and your K-Pay stuff for, and the other is really more of an investment side.
I think there's a two sides to that question. There's the question of Kinesis account and sub account for parking different assets on blockchain, which might fall over to Jason. What I can speak of and to is the segregated nature when you talk about debit card or account functionality. A lot of the debit card work we're now moving into is allowing hybrid account functionality where people can treat and pay in via ACH and do direct deposits in fiat and have a sub account in that regard. So you sort of have like a sub fiat account that can do all your sort of everyday banking and functionality in that area. That can then you can bring that then in and then across into your Kinesis ecosystem to buy your assets. As far as the sub account question is concerned, I know it's definitely been, on the product development roadmap radar for some time. I'm not sure as to where we're at on that one. I don't know if you've got anything on that, Jason. I don't know if there's even any progress on that.
Rhino, this particular topic has been around for a little while, right? Now, if you talk about traditional banking services, you can have multiple accounts under your one account, happy days. One of the things that the answer is, I think we are working towards that, and it's something that I'm pretty passionate about, because it's about giving our clients as individuals the ability to manage their money and to manage their investments and their savings and their gold and silver with us, and to allocate that as they will. Now, the hard part on that is it's not just a matter of saying, oh yeah, take something divided by 3 and you've now got 3 accounts, because underpinning that there's wallets, and each of the wallets, they don't aggregate up. For some of our virtualized accounts in the KMS, we've got something that we're working on, which we think is pretty cool. And that's about saying, how can you do that? That then extends into, well, how do I give other people access? Think about your business accounts at the moment. How do you give other people accounts? How do you get your atomic permissioning? That gets really hard really quickly. How do you give permissions? How do you do that? So as we broaden out, as Tom said in the beginning, we want to become a full stack service provider for the banking and finance and for payments. In order to do that, we need to have really developed and mature ways of being able to allocate the funds. How do you aggregate them up? On what happens on a view? Who can use that account? And it's something we've been working on for a little while. The way that the wallets work, particularly with the way that that things are kept, that can make it somewhat problematic. But we think we've got a way through most of that at the moment.
So since we've had our last meeting, we actually saw the KVT launch, and many people have waited a very long time for this to happen. So congratulations on that. It sort of happened while the KMP was underway, which I think because of the requirements supported KVT values. And now, of course, we're in a pause with the Mint program. So can you perhaps maybe speak to, there was something in the quarterly report regarding a utility for the KVT that we don't know about yet. And then also just where do you see KVT prices going? Obviously you don't have a crystal ball, but like right now we've seen prices drop, and maybe just speak to where you see KVT going.
Yeah, okay. So, regarding prices, we need to be a bit careful in what we say there. But of course, I'm a forever optimist as far as it's concerned. And of course, I consider us just at sort of ground zero as far as, where we're going, what we're doing. Yes, it's taken time, but, if anyone was sort of coming in and where we are now and looking around, they'd think, wow, look, this is a world of opportunity. Of course, I understand that KVT holders are suffering a bit of fatigue and so on and so forth. So anyway, back to the beginning part of your question. The launching the KVT, it was something done, without notice and so on. I mean, it was already trading in the decentralized market. So it was already trading, and the KMP was going. The KMP was producing good yields. There's good yields flowing. I think there's still good yields flowing, to be honest. So we decided we might as well facilitate the market for it. So that's why we opened it, because it was already trading, and so that we got it going there. And my view is let the weak hands let go of their KVTs if they don't have a positive view of the future with Kinesis, then let go of them, because there's plenty of others in there that will buy from them, right? Including us. But our view is, let it pull back, and then let everyone be part of the success story of this, next phase, the second coming, so to speak, and enjoy the ride while that's happening. So that's what I'd say on the KVT. And like I said at the beginning, we've got a lot of powder dry. That's intentional. We want KVT holders and stakeholders in general to be part of a pretty major success story, and we're going for keeps. And let me just say, it's like extremely high stakes. Like, we see the stablecoin side as just a small part of our overall business. There's many other bigger stories that are coming to fruition, but that's huge unto itself. Like, look what's happening there. Like, this whole privatization of money, and what's been sort of pushed through as far as the US administration currently and their whole agenda. We have to adapt and evolve to that, and it happens quickly. And we've adapted and evolved, and we'll be pushing out on the stablecoin side that pipes into all different jurisdictions around the world. We've discussed how it really makes a difference. And it flows into, KPay, the merchant directory side, everything like that. Why? Well, instead of, my local town, let's say I want to go sign up merchants in my local town. It's one conversation to have, do you accept gold and silver and Bitcoin and Ethereum and Stellar and XRP, etc.? Or, will you accept basically tokenized AUD? Or a digital representation of AUD, right? You don't need to change any prices. It's, people, you'd just be receiving AUD, really, and you can withdraw it out of the system into your bank account. So there's no change there. That's a much lighter lift. It actually enables our users and community to really get mobilized, get activated, go sign up merchants. This is what we want. We want, like, the Keynesian army to get activated and get mobilized and go sign up merchants. And KPay and what we're doing there, it will really facilitate that. It's full end to end. And it plugs into the whole sound money movement, where we don't have to be reliant upon the legacy establishment, right? Which can, chop and change and, influenced by all different things within that, a particular environment, a particular regulatory environment or governmental environment. So that end-to-end approach is really important. And that's going to translate into, a real big contribution into the fee pool. We have a number of other programs coming online. Real world asset space is going to be really big. Like, this is something that we've actually been working on for a number of years, that you guys haven't even really got a taster of yet. But there's other things in the regulator space coming, and it all sort of connects together. Like, we're also different parts of business coming online, and the US is coming in focus as well. That's one thing I would say. And we have a major partnership in the US that is something that we've been building in silo, and there's major partners around that, and so all of that then connects into everything else that we're doing, and you'll see this like coalition of major institutional partners like come online. So we've been strategic as far as building this out. On one side, there's all this exciting stuff that we're building. On the other side is, okay, well, how do we keep the plane in motion at 40,000 feet and not stall? So, we're doing our best to look after everyone in the community, KVT holders. If people want to sell, then so be it. Like, that's just that. But over time, like as we release these things, as we go into PR campaigns and cycles, as new partners and institutional counterparts come online, it'll be very well supported. So that's my view there. I mean, it was the KVT price, and I'm a market practitioner myself. Markets love to gap down, will fill the gap. Markets love to fill gaps. So, where we had like minting cycles rewarding KVTs going back to the old days, which might translate into a cost of, say, $500 per KVT, people are looking at their cost base of $500 per KVT. So it's actually healthy for a market to fill that gap. Okay, go down there, test support, and then bounce back up. Now, the KVT prices, in my view, considering, I would say like the multi-year gap in free trading, it's behaved quite well. And you guys have helped with that as far as secondary market and that sort of thing. So that's really assisted there. But I think it's held up reasonably strong, and it's on actually a very strong foundation to move up from where we are now. So I'm not concerned by the KVT at all. In fact, I think it's well positioned to be strong going forward. As far as the utility side, there are some things there that we'll be introducing that will be very supportive of KVT, just from standard things like plugging into rewards and basically using the KVT as basically the key to open different services within the system. That is coming online. But there are some other major things that we're doing to support the price of the KVT there as well, which also, in my view, create a major stabilizing base for the KVT. So that's all coming, and we'll always be supporting the KVT. Oh yeah, the other thing as well, and this is not just the KVT, but more broadly speaking, and this extends into KAU and KAG, there'll be a greater focus to externalize them. So push them out into other exchanges, other platforms, and so on and so forth. Now, a limitation with KAU, KAG currently is that they are a proprietary fork of Stellar. So it makes a very big difference, as far as a centralized exchange listing KAU and KAG, because they have to basically embed our entire wallet system, like our entire blockchain. Whereas, let's say if we were public Stellar, it's really just a matter of them turning on that capability. Or if we were utilizing other public blockchains, it's turning on the product. And so it's a much lighter lift, and it plugs into how they conventionally do business and conventionally bring online new tokens. That will come into focus as well. So, what does it mean for KVT holders? It means that the KVT will be in front of new buyers. Now, yes, new buyers also can become new sellers, but it's getting greater exposure. KAU and KAG will be getting greater exposure as we list out there. Where like the stablecoin suite, it will be getting interfaced into, a heap of different exchanges as well. There's a whole strategy associated with that, and that expands to our other native tokens as well.
All right. Well, the minting program was initially launched a couple of weeks before the anticipated launch of Currency One Suite, which has been delayed. Is the plan to restart the KMP after the launch of Currency One this time?
Yeah, so we navigated our best with regards to that. We got sort of stuck in that. There's benefit to you guys because you all made money out of it, whoever was participating in it. I know that it really tested our systems and our whole organization, but it was kept open much longer than expected. Let's put it that way. So that was a gift that we gave to our community there. And I know that we had to maneuver with the changing of tide with that, like we tried to make it sustainable, and it just got a bit too costly in the end. So we'll fire it up again for everyone. We said that we would. We'll fire it up again, at the right time, and in a cohesive way with the stablecoin suite. Because let me just bring a little bit more perspective. There's volume requirements and the like as we plug into third parties, and this is like third party data indexing sites and the like, CoinMarketCap, CoinGecko, and they've got a list of requirements actually get ranked. And it's got to do with, there's actually a number of different requirements, which includes volume and coins in circulation and this kind of thing. And so, we just thought, well, as we move into the hybrids, which crosses at the time USD1 against KAU, then the minting translates actually into volume for USD1, and that's what we actually need. So, but then, USD1, it got delayed and hybrids got delayed. So that we got stuck in sort of a bit of a limbo period with the minting campaign. And that's that. I mean, whoever participated, they benefited there, and good on you guys for doing that. I know that a lot of people made some good money out of the system, and so be it.
Yeah, I was going to say everything you guys throw at us, we're gonna do. We're pretty much yes. You throw something out, we're gonna try it. To that end, I think the other thing we noticed, and this probably is good for you guys, is it was almost a stress test for the system. And so I guess the logical question is, what have you guys taken out of the KMP from a technological standpoint, and what are the steps to kind of smooth out those bugs?
We've looked at this over the years, and to make it perfect, what we would need to do, and I'll just spit it out, we would need for the Mint to basically be built on the KMS tech stack. The Mint is different technology. The Mint is actually ABX technology. It's basically a skinned ABX platform. And so what you have is one platform interfacing into another platform. And it can just get jammed up, and there can be, latency issues and the like when it gets really busy. I mean, Jason can comment on that as well. But, another issue that we've had is we've got two market makers in the KMS at the moment, one on the pairs that we're about to get replaced by the hybrids, and our new market maker that we built on that sort of sits within our tech stack as well, on the new pairs. And it was all supposed to get sort of, one was supposed to replace the other. With that will come efficiency. But to a large extent, there's a little bit of buyer beware that, because we're dealing with in the physical space, the market maker, it only has a certain inventory that it can offer into the market. And as that gets eaten down, and we've tried to speed it up as fast as what we can, the replacement of that liquidity back into the market, it used to be quite slow. Now it's faster, but anyone minting, they need to be very cautious of looking at the order book, making sure that there's liquidity there as they sell into it. Particularly, and we always recommend to not use market orders. They should be using limit orders. So there's those things to consider.
I just want to jump in there. So, one of the aspects that Reno did refer to there was the exchange page itself not being live, as it were. So this is separate from the market maker refreshing their stocks, and it's separate from the transfers across from the mint, which understand that's a separate system. But we have issues with the exchange page order book just being sort of minutes out of date sometimes, and also with the status of your current orders just not being up to date. So you think there's an order that's in progress, but it's not actually in progress. So the concern that I've got really is that, okay, we had some sort of more intense activity during the KMP, but you're probably looking at no more than a few hundred people spread throughout the day, and we were experiencing these problems on what really is going to be one of the premier parts. It's the pro page, the pro exchange page. So I think that's something that caused some concerns.
It kind of wasn't a bug, was a bug. And here's the thing. I think with the KMP, you've got to remember that there's 4 parts in play here. So when you go to the mint and you're minting, it's not just an exchange. We can do at the moment several thousand transactions a second on our Stellar blockchains between buying and selling. That's not the issue. When you go out to the mint, there's 2 unique functions. One, there's a physical market underneath, so we need to be able to buy and sell the gold. The second thing is every KMP effectively was a blockchain operation because we're minting. Now, minting operations, you don't get thousands of a second because the blockchain has to stay in sync and all the nodes have to agree. So I think what happened there, Yuchiki, was because we see the blockchain and we're minting so quickly, the minting needs to happen sequentially across the blockchain so that it all lines up so that you've got full auditability. What we were seeing, I think, at that time is a couple of API players had started minting. We were seeing up to 1,000 mint transactions occurring. So I want to put to bed categorically, we don't lose and transactions are not stuck. What happens is, from the mint, everyone's pushing onto the mint. We're waiting for the confirmation back from the nodes on the blockchain that the minting had occurred or that the burn had occurred. Whilst we're waiting for that, they all get queued up. And if someone just happens to come in after a big API player's put 1,000 transactions in, we have to get through them. What we've been working on, as Tom's pointed out, is just how do you bring down the node availability, because it's got to go out to all the nodes to get consensus that there's been a blockchain operation. Now, if someone's got to wait for that, as that would come through, then that would be done. In that, once we get confirmation from the blockchain, we get the physical market, then that would settle. When it comes to the sticky pricing, is because the pricing that's reflected back from the mint and the market makers, what you're seeing on the screen under normal conditions. However, because we've now got the market maker, which is connected to the mint, as we're getting our real world gold and silver prices coming through the system, that's what's causing some of the bumpiness. We're looking, as Tom said, to say, how do we provide multiple market makers to make sure that our price is aggregated. And we are offering probably some of the best prices in the world. And how do we maintain that and do that quicker? A lot of the orders that are associated, if they're caught up in the queue because of the KMP, we don't see it under normal activity because you're not waiting for the mint to come back. They are independent systems, and we do that partly because it makes sense. We air gap them, to an extent, so they're not deeply connected, and that also helps protect, from a security point of view, how people want to attack. People kind of turn up on the website every day, and we see them, and that all manages into that.
I was going to ask, what is your view of the current gold and silver markets? Watching North Star bad charts, seems like we're in a correction right now. What is your view of where we're going to be heading over the next few months in the gold and silver markets? And how is everything that's going on with China and Russia and BRICS, and them evaluating their own gold right now, I think in Hong Kong, how is that going to affect the overall global markets?
Yeah, and in fact, that's been the subject of the last couple of Live from the Vaults, is really the tokenization of everything real world assets. And it really keys on the only first tier asset globally that is acceptable and fungible around the world: gold and silver. So from a high level perspective, obviously we see the fiat gold price undervalued versus the real gold price. And of course, that's now being determined outside of the LBMA CME kind of, what we call it, a cartel is when a number of people who have position concentration can pretty much move prices where they want to move. And that is now being gamed by the real physical traders. And so as physical prices get settled, I think this is the best way to explain it. As physical prices get settled, where a real owner of a bar, not a 4% skin in the game guy has a bar, when a real owner of a bar says, like me, might say, "Oh, I'll sell it for that price." Well, that's a whole different story to just gaming a synthetic price. And I think so. Where we are, we're recording this today, where obviously we see the usual gap close. Tom was talking about gap closes in every market. We see a gap close. Why? Because the whole bunch of derivative markets always get mark to market. The Bank of International Settlements squared. In other words, anything borrowed from the Fed, and we know that the Fed borrowed 2 tons of gold in June, which seemed a little crazy, but obviously that has to be marked to market today. Well, we're recording this. In fact, it's done already. So obviously we expect these things, and not only do we expect it, but the physical guys sit back and say, "Bring it to us, baby, because we'll take it." And that's simply what's happening. So, obviously I'm not going to name any numbers because nobody knows the real price of gold, because it has never been established yet before. But I think that's coming. And I think from a very high level perspective, I just want to say, Tom gave a really good high level perspective of things. People, I think, forget that ABX has been around for 15 years. I mean, those pillars that were set in place were the actual facilitators to create the tightest wholesale price. And then Kinesis, the launch of Kinesis, was the next really exciting part of the story, where we could digitize it into such small amounts, and it's and creating vaults where this fungible product, this fungible money can be arbitraged to one price. Now, nobody else has actually done that satisfactorily. ABX did that. Kinesis couldn't have existed without that. We are so far ahead of the curve. Why do people look at our prices and go, "How the hell can you do that?" So obviously there's so much going on. And if I'm a pilot, now I see that we flew a journey and we went through what is a hurricane. And so many of the people around us crashed and burned. And where are we? We've come through this. We've come through this strong. And we've come through this with experience that really you can only learn, as Tom was saying, look, hey, you can only learn this stuff by doing it. And I think it's like someone who, when you hire someone to do a job and they've got 50 years experience, they do it so quick, so easy. Why? Because you think it through. So I think the next exciting leg, and I was so excited at the beginning of the launch of Kinesis, but I'm even more excited. And it's like having a Christmas present you daren't open because it's not Christmas Day. We know so much stuff that we want to talk about, that we can't talk about yet, that is so exciting. I see this as the relaunch of Kinesis. Kinesis is running on, it's beautiful, but there's so many new things that are about to launch. And I think this is, to me, the relaunch of Kinesis. This is the next leg where we're talking about real world assets. We're talking about really what the BRICS are going to be doing. We're talking about what the multipolar world is doing. We're part of that process. So I think really excited about the whole thing. This is not just guff. This is me firmly believing in it. I understand the journey that we've been on. And I just think it's about to unfold in a way that if only we could talk more about it now. But as Tom said, it's all going to be revealed step by step by step. And as far as the KVTs are concerned, I was involved with some of the whale investors at the beginning. Every one of those guys are saying, "What an opportunity!" And they're in, and they're buying. And they're buying, and they're saying, "I can't believe the price." So, obviously, we know that when all of these projects roll out, that's going to create. I mean, a KVT is like a bond; it pays a dividend. I'm never going to sell. Most of the guys say, "I'm never going to sell my KVTs." Why? Because where am I going to get those kind of yields in the future? So, and it's a yield that not based on debt. This is a yield that is created in reality. And I think, and where is that? Where is the limit for that yield? Well, it's a hell of a lot higher, I think, than we've seen so far. And all of these projects are coming on. So really, that's all I wanted to say, because guys, I'm 23 hours into a day here. The team runs 20-hour days all the time. Just excited as hell. Thanks, guys, for even having me on.
Thanks, Andy. So you're getting paid 3 hours overtime. This is a 20-hour day, got exceeded by 3. Thank you for sharing that with us.
Hey, no worries.
There's been instances where there have been issues with the Kinesis system, as we were discussing earlier with the KMP, and some people were not getting emails when the KMP was coming to an end, and they were continuing the mint cycle. Also, issues with funds not getting over to the mint. Could there be a way to add messages or disclaimers so that people are aware of like a program like KMP coming to an end, or if support gets messages, they can put up banners saying currently support is getting messages about XYZ, please don't do X. Is that a functionality that we can add into the KMS in the future?
Yeah, so I first want to comment on the email function. So it's always best practice and good practice to utilize email for communications. It is a database, and it is a robust mailing platform we use, and it definitely has to be used. When we investigate the claims to users not receiving emails, it's funny because every time we investigate, there's always a reason. I didn't realize I unsubscribed from that notification. I didn't check my spam. It got lost I looked for it. Now it seems to be there. So, in the instance of claim of not receiving email, there generally is many reasons why somebody may have missed an email. So to that regard, I would say to everybody, please add us to your safe senders list. please check your spam and make sure that you report us as safe email. Make sure you subscribe to the right preferences. We have a preference center, and all of these things are the first steps that one must take to ensure that you've got good communications, especially when you're dealing with a company that you have your a financial investment in. And then to the banner and the notification system, I think it's a great feature request. It is something we can definitely look into. We have the capacity. It's about coordination. So it is a feature we'll definitely investigate. We'll look at it. It's broader than just putting up a banner. There needs to be proper communication. It is something that needs to be highly coordinated, but it's something we can definitely look to bring in the future. So it's a good request, and it's something I'll definitely flag up the line.
All right, Tom. So here's a question about the development bank we heard about last year that was created. It was quite an interesting launch to the project. Can you give us an update on the development bank and how that relates to real world assets? Everything sort of seems to be moving towards that as the next frontier in assets.
Yes, the Development Bank of Resilient Prosperity, which is a very interesting project. It arose out of the small island development states, and it's now going global, and it's recruiting. They've found a lot of support in what they're doing with nation states, but also with different organizations that see what they're doing as the future, which is bringing online and monetizing the value of nature-based assets. So what's the value of nature-based assets? Well, that's a very good question, and there's all different schools of thought associated with it. The academia world is getting involved in it. I know that Cambridge University is now playing a very big role as far as getting involved in actually helping to value nature-based assets. These are assets that may not have any economic value whatsoever, but they're also assets that perhaps we actually wish to be in our reality now and into the future. So, the question begs, what value do we associate with assets that we wish to bring into the future? Now, I think that analogies or similarities can be provided to collectibles or art and these kind of assets, whereby they might not be income producing in their own right, but yet they have some kind of value because someone wants them for whatever reason, right? Now, I think a lot of people would contend natural assets, nature-based assets, we don't want them to go away. So what is the best model to preserve them into the future? And I think that we've had a few failed sort of, models and systems, and, I have my own criticisms towards, say, the carbon credit system and so on and so forth, and the way that that's sort of been sort of blown up as the savior of, things. But this is something much more holistic. This is more of a, well, what do we want to be in our reality tomorrow? And so they're touching on something pretty major. The majors are getting into the space as well. So it connects in with the whole real world asset side. It's a new asset class that is emerging. We have a front row seat. We're part of it all. You're going to see, more come from it. Where we're also interested in being a service provider to obviously monetize, tokenize these nature-based assets for the development bank, but also what it means is working with governments. And so it's not just that work that we're doing, it's more holistic work as far as, okay, well, we have basically a monetary system founded on real world assets. Yeah, our real world assets are gold and silver, which have played obviously an enormous historical part in monetary history. And I think, they're even coming to the fore much more as we, enter a period where the spotlight's on, what value does fiat currency really have? And I think that cryptocurrencies have sort of highlighted and opened people's minds and consciousnesses to the fact that money isn't necessarily what a government tells us is money. We can have different forms of money, and we are going into privatization of all of that. So it's a very interesting space. We get, there's pathways into governments and the like through this partnership with the Development Bank of Resilient Prosperity. So it's definitely an interesting partnership that you'll be hearing more of as we, steer through into the second half of this year. So yeah, that's what I will say there. Our real world asset project, that is a big one. You'll hear more and more coming on that in the future. So yeah, that's sort of rounding it out there.
Well, I think that's a great segue, talking about real world assets and tokenizing and digitizing them. And now I want to ask a question about turning the KAU and KG into real world physical metal. There are a lot of members that want to redeem their KAU and KG for lower weight bullion products. Right now, the 100-gram bars, a lot of the vaulting providers don't have the bars in their local jurisdictions. I think there was some talk in the past about partnership with bullion businesses to be able to redeem KAU and KG for smaller quantities. Can you share any details on the progress with that?
So yeah, I mean, we'd have to interface into how all these mechanics will work, and obviously, we've started discussions, Daniel, on how it would work. I mean, an external type redemption service that is provided, then that's just a service being offered to the community, really, to the ecosystem. So that's fine. As far as it being like an official redemption internally, like our system likely would not see that as an official redemption, because it's really just like basically a transfer of KAU to you or to another service provider, and then you guys doing the whatever you do, like exchanging it for a smaller quantity of gold or the like at the other end. So there's not a problem there as far as that is concerned. We can have like preferred partners that we work with on that. And, I think that a discussion around partnership certainly should evolve there. And, so that's what I'd say.
All right, everyone. Well, we've come to the end of this Vaultside. We just want to say thank you to all the participants. Kinesis, thank you for joining us tonight. This episode will be aired shortly on the Kinesis YouTube channel, as well as C4SM. And once again, please look us up, C4SM, and just see some of the things that we're doing in the community, and look to support us any way you can. And once again, thank you everyone for your participation.
Thanks, everybody.